Hey, today I'm gonna do no face cam, but I don't know if you guys can hear that background behind me. It's just the wind. It's like talking, but now we're gonna be talking about is corrections and how to identify a correction and when to know when a correction is happening. So previously we talked about indication. So when we create a okay, okay, so our correction is basically the pull down that we need in order to create a higher high. So in this case, this was our indication. Alright, it broke above our level. Then we get price to correct down. This will be our correction. Once our correction doesn't go past our line, or it comes like right here, the candle will come like right here, and we close above this. Sorry about that background. I don't know why it's so loud now. When I wasn't recording, it was so quiet, but then now when I'm recording, it wants to be so loud. But bear with me. So oh my gosh. So when we indicate, this will show us our indication. Our correction is when we close above our indication. This is a correction. Okay? Our correction is now telling us that we will be going up to pass our higher high, or leading to pass our higher high. And there's also other ways to confirm it as well. If we definitely create a FEG, and that I'll talk in later during the courses or whatever, is that is a certain confirmation, because then that let us knows that buyers has full control over here. Means buyers have full control and buyers is not willing to let down our indication zone yet, so that for sellers to enter. And a correction is basically, it's like, say the sellers want to come down and they want to pass this level, but they don't have enough like power to sell, or they don't have. Okay, let me break it down in a better way. Say you're going to the grocery store and you want to buy a drink, let's say a pop, and it's like $3 or $2, and you only have $1 on you. The cashier is gonna tell you are short $1. And say you have like a homeboy or someone there, you're gonna go to him and ask him if he has a extra dollar to help you. And if he gives you that dollar, then you will go and pay the full amount. Same with price. If you have the full dollar, right? When we're coming down, if we have the full dollar here, we will come back down. But since we don't, and we only have $1 to the $2, right? The cashier could simply just say, no, you can't purchase this. And that's when we will reject and go and continue into a continuation. And correction is pretty simple, but whenever a higher low happens, that's when a correction is over, right? And that's when you place the trade when it goes above the previous high. So you place your trade when it goes above the previous high. So right here, you place your trade, and then that's where you will get your money. Okay? So it's pretty simple, and yeah, but there's also one more, and that is continuation, and I'll say that in the next episode. But you want to buy off the previous higher high. So say we're coming up to this higher high, you want to buy from here. Why? Because we'll be continuing to create a new higher high, if that makes sense to you, right? And right? So we create a higher high, be like, alright? price rejects off of this higher low. We come. Here would be our entry point. Boom, because this is our high. And we'll come to create a new high. Okay? And that's where we get our money. It's pretty easy. That's where we get our money. And yeah. But in a continuation, as I'll go more depth into that, it is pretty much a repeated thing that just keeps going. Obviously, it's a continuation, but for corrections, sometimes there will be a correction, and there will be sometimes where there will be not a correction. So, say your correction does not come back to your level, like say it doesn't even come back to your indication level. This still could be a good trade, but you would also have to watch your risk because it could come like that, come down, create a high low, we go up, and then we come like this. So most times it's sometimes it's like that, sometimes it's not. But what we want is like full confirmation to know how we are going to be trading and how we are going to move, and it is a second, I would say it's a second correction, not correction, my bad. A second signal for us to know that yes, we could enter this trade. Yes, we know where price is going. Yes, we know that price is going to be where we want it, and that's how we make our money. And pretty much that is pretty much it. And yeah, yeah, like it's simple. Correction is pretty simple. I can't really go depth into it because it's really self-explanatory. It's like common sense. But it's it's pretty much that. I could show you. Let me show you in the live charts. Whoops. So here, this will be our indication, right? See how we came down, but we didn't touch in these levels to create a correction. We just still went up. That that could be possible, but be like that sometimes. But it could possibly come down into our correction zone and we reject and go up. Or we could just still come down like what happened here. We rejected, we came up, we didn't break this level, and we pushed straight down. In here, we came down, alright, came up, created a FEG, and continued all the way up. But sometimes the market does not do that. It's fine. It's not really a L, but that's how it is sometimes. So, like I said, let's go back to where we left off. What the heck? Why can I not? Uh-oh. Uh-oh. Oh, there you go. Bro, I don't even know what I'm doing. And then this wind is like, is being so annoying. What the? So yeah. And now let me show you if our bearish trend. So see, this is our level right here. We come up. That's our indicate. Alright, actually no, that's not our indication. We come down. Cut. Here will be our indication. Alright, we come up. It's self-explanatory. We came down, indicate, come up, correction. We had a little bit of a pullback, but we pushed back straight down. A little bit again, and then we head straight down. If we're not breaking these highs or lower highs, we are continuing down. We have to break above these levels for us to change direction. Okay? So if we don't break above these directions, we are not going to be entering in the trade, and we are not going to change our bias, but that's how it is, man. So this is pretty easy, it's pretty simple. I'm gonna go to the gym right now, go work out. Um, I had pretty much of my day was pretty much of a L today. Not gonna lie, I made a bit of money. I made like 80 bucks, and then 200, and then kind of lost 100 bucks. So pretty down on that, but it's all right. Um, I'm fine with it. Some fender benders can happen in the market, but you live to see another day. So I'm gonna go work out. I'm gonna get off this. I'll see you guys on the next video of the final stage of the course, and I'll probably drop more videos in like the course chat to show you guys the entries, how to find entries, how to find out fake outs, how to identify liquidity sweeps, how to identify liquidity. Like there'll be more. I'm gonna try and post daily, but as I do have work and stuff, so bear with me. And yeah, let's hope we all could be profitable traders one day, and we'll all meet up one day. I'll see you guys, and I see you guys. Peace. I also hope that this was like a good description. Like, let me know in the comments, cause sometimes I be talking too fast, or like I be explaining something, and like it doesn't really come out how I want it to come out. But I'm trying, man. But I'll get better over time. But teaching is really kind of hard, cause like I can't really teach. I just do as I go, and like it's I don't know. I don't really. It's kind of hard for me to teach, but I'm trying something new. I'm trying to give you guys how I made money and how you could make money too, but you just gotta learn the skill. So we did I, C, now we're on the last part, which is C again. So ICC. Okay, so I'll catch you guys later. Peace.